one thing that could be important here is we have this gap here. So we have these lows, and then it this day opened and it just opened below that, and that price never came back into that level. And then it tried to go back into that level there, and it didn't. And yes, so it did close that gap here, but with it being like this special type of breakout, um, I mean, it does weaken it because it did go through that price, but I think it's still significant with this gap in here. So I think that's a level that the bears would want to get through. And then the level after that is the bottom of this bull spike. It's right here. And I'll go ahead and just draw that in there. So as it goes lower, we also have the 200 moving average right here. So multiple levels for it to test as it goes lower. All right, so bears had a pretty strong close there. So what I mean, so what draws my attention to this? What's catching my attention on this now? One, it's the lowest close of the day. I think more importantly, it's the largest bear bar of the day. It's the largest. It's the largest bar of the day. So when you see that, and it's not too far into a trend, um, so I think this is definitely a bearish sign. When you see this large close like this, you look back and you say, well, that's the largest close today, and it's also the largest bearish close since Friday at 10 at since Friday at 10 o'clock. I still think we're in a tricky spot though. So it is going down right now, and I laid out these targets that we have below. These three targets as it goes lower. But I don't want to lose sight of what happened Friday with this huge bull rally, and nothing here has changed my mind on that. There's either going to be a rally today or sometime later this week, like Tuesday or Wednesday. So it could keep going down like this here, or this what this could end up being is a larger wedge pattern. So first push here on the open, then you have this second push, and then this third push gets you down here. You know, it could be that. So like if you're selling here, what that could end up being is just selling at the bottom of a wedge pattern. So how I'm going to trade this is I would rather have some sort of pullback, maybe some sort of double top, and then start below that. So what I like to do with this now is look at the 2000 tick chart up here, and this gives me kind of more refined entries. So you can see like we've been going down here, and then we had this pullback here, and then we had another one here. So if you're in the bearish mode, then you can pull up your smaller time frame chart and then look for pullbacks to the moving average, and then that can give you entries. If we get a good bearish close here, I'm gonna go ahead and just sell it at the. I'll just sell at the close because we still have this gap I pointed out to test that's getting really close. Um, Another thing I want to draw in. So we have this opening range that happened, and then we're breaking out of that range, and then the a measured move will put us down here. So that's also a target just right below. So if we just get a bear close like this or better, then I'll just go ahead and sell that close. So I'm gonna go ahead and prepare my order. Make sure I'm trading the right thing.
Order submitted.
All right.
Order filled.
All right. So I'm filled, and I will go for 4 points there. So we had the opening range, and then a couple strong bars breaking out of that. I would expect a little bit more lower, especially with some targets right here. I mean, this is all of this is really acting as a magnet. So like especially like this gap, and I'll come over and show you again what I was talking about here. So we have these lows from I believe it was Thursday, or maybe Wednesday, but these lows, and then this day opened and it went lower. It opened lower and then it came back, but it wasn't able to test these lows, which created that gap. And then this breakout, I'm not really including that just because it was so. Um, I mean, it weakens the case for this gap because it did close, but I just think it's not too significant because I mean, look what I mean. This bar would just poked right through. There was no pullback coming back and testing it. I mean, price spent no time there, which is really what I think is what's really important. So price spent no time on it during this area, and it really just broke out pretty quickly there, which is why I still have that gap open. Yeah, and there's some construction. They're putting the pool in at the apartment here, and I'm right by the pool, so I probably have at least a month of this construction noise. I would expect that we should be able to get profits here. I would expect that it would come down to this level, and if it doesn't, we uh we should be able to at least get out around break even. So I think the most important thing in trading is number one, it's just taking the best trades. It's just giving yourself the chance of just by giving yourself good entries and not by setting yourself up with bad entries. Uh, I believe it's very difficult to manage your way out of a if you're only taking bad entries. I mean, you're not, you just can't do it. The second most important thing though is that it's the risk management. So, 20 seconds left. Let's say this bar closes on its high, this bull bar. Um, if this was my live account and it was my own money, I would place my stop above that and I would just get out. I wouldn't worry about taking the loss. It's a small loss. Um, so this one I wouldn't get out even in my live account. I wouldn't get out above this one. That's not a strong enough close for the Bulls. If it had closed up here, I would have moved my stop loss right above that, and I would have just taken the loss. I wouldn't have worried about. Uh, I wouldn't have worried about trying to get the profit on the trade because what I'm seeing would have been a wedge, three pushes down, 1, 2, 3, and I just because I feel like there's too much risk of it continue of the Bulls take control and going up from that wedge. Um, so that's how I would have managed it on my live account. If it closed on its high, I would have just gotten out above it, and that's okay. Just taking the loss. With this being this evaluation where it's not live money, I'm just trying to pass the evaluations. That's kind of like the big disclaimer that I say every time I'm streaming. I'm just trying to pass the evaluations. Um, you know, it's a 1 day pass right now, so I just want to pass them kind of as quickly as I can. And they're cheap, so I'm not worried about failing them. So that's the difference between like live trading and passing evaluations. It really comes down to with with the evaluations, I'm much more lenient on the types of trades I take. I'm much more the range of trades I take is much wider, and I'm not really worried about managing the trade. But with my live account, I'm very selective, and uh, I do manage a trade. I manage the trade pretty quickly. I mean, so if I'm thinking I'm wrong, I'm just going ahead and getting out of it.
Target filled.
Cool.